Here we have a bar by bar study, crude oil, on a 5-minute time frame. For context, we are in a downtrend. Now, the market finds support at A. And what grabs my attention are bars B and C. Although this is a bar by bar study, we don't analyse every single bar. I'll be banging my head against the wall. We just pick bars of interest. Bars B and C have the same spread, yet the volume, but bar C volume is over twice the size of B. So the force has increased, yet the spread is the same. So is bar C selling? We don't know. We don't know as yet, but I'll note that. It's interesting. Then what happens? For 3 bars, we have no continuation to the upside. We hold this local level of resistance. And bar D pops its head. So it makes new highs, but then is reversed to close weak back under. Bar D has an opportunity to drive up higher as we make new highs, yet sellers come in and they close it weak on its lows. And then we react to E. What do we note? Well, spreads increase, volume increase. Then we have F. Look at F. What do we note? Spreads narrow significantly with reducing volume. Not only lower volume, but reducing. This bar, the second bar, has lower volume than the first bar. And look at the spread. These are tiny, tiny spreads. So what does that say? We're trying to move up. So there is a lack of buying pressure. I will be using buying pressure, selling pressure, force, the force of selling, the force of buyer, time and time again. This is the way we like to think of bars, of the buying and selling pressure. Hopefully I will drop it in by the end of today's session. Anyhow, this clearly is buying of poor quality. After we've just said we've seen selling of good quality. So the market is making lower prices with good flow. Whereas the attempt to rally here attracts no buyers. And this is reflected in the volume. There is no ability to drive or force or push this market higher. This is what we would call a no demand bar. Again, don't worry, we will go into these in depth. And this would be a valid trade. We have no demand in an area of supply. You know, there's selling behind us after we've rejected the highs from a hidden up thrust, a reversal bar. This is a high odds trade. And then bar G, what do we note? Good selling again, widespread, closing weak on its lows with a surge in volume. There's more to this. It's similar volume to E, yet the spread is wider. And we know there is no demand from the rally to E to F, so we read this as ease of movement. The same force of selling at E to G produces a wider spread. We get better flow to the downside. So we're beginning to see that sellers are having more effect in this market. They are present and active. The next 3 bars, we try to rally, yet it's capped to the upside. We cluster here, and we can see that higher prices are being rejected, also lower prices, but we'd say that sellers are capping progress. Why? Because sellers are in control with no signs of buying. Bar H. We touch support, we get a surge in volume and close fairly firm. The key or what's important to this bar, is that we dip under all this price action, all to the left to reverse and close, back above support. And this is support. We would expect buying at support, so is of no surprise. Next bar, continuation to the upside with fairly good volume. But bar J is very interesting. It's the same volume as the previous bar, yet the spread has halved with a close off the highs. So the force of buying is the same, yet the thrust has shortened and it's struggling to go higher with the same amount of fuel, which is volume. Only selling can stop this bar producing a spread the same as that. Again, this is of no surprise. Why? Well, we've got selling here at G and selling here at E. We come back into this area and we see selling again. Interesting. Bar K, good bar. We break support with huge volume, closing under and weak near its lows. And at this point in time, we would say that sellers are in complete control. Why? Well, we're making lower highs and lower lows. We're holding under support. There's evidence of good selling in the background with poor buying. The volume is very high on this break. And we would expect high volume as the sellers must absorb any buyers that are left in the market. I mean, we know there's buying at this level. Why? Because look at A and H. This is support. Look at the spike in volume. Look at the spike in volume. Come here. There's volume here. So there is active buying along this level. So if the sellers need or want to push it under, it's going to take a great deal of force or activity, which is volume. So the force of selling here is monumental and swamps any buying activity. And we know that. Why? Because we close under with that very high volume. But, and it is a big but, the volume spread relationship is out of sync. Something is off. The volume is too high. So A, there is hidden buying, or B, that sellers did actually absorb every last bullish order. Then there's literally no more buyers left in the market. But we don't know anything as yet. We label this bar. If we're live in front of the charts, this bar and area would be marked. We don't have any of this information. So as we're live in front of the charts, this is all we get to see. So we fall further from K to L where we find support. Then the next bar is interesting. We rally with similar volume. In fact, for all intents and purposes, the same volume. But the spread has narrowed. So we know that selling is still present. Otherwise, we should produce a bar like this. Bar M, what do we note? Very narrow bar with low volume. So we could say that the buying force has diminished. There's no ability to rally. Again, another no demand bar. Then two bars at N. They're interesting. The first bar here pops its head above the no demand bar and reverses to close weak, acting like a reversal bar with a surge in volume. We would think from this bar, lower prices are on the cards. However, the second bar just manages to pop its head above before reversing and closing weak with even higher volume. So with all this extra force of buying, nothing is actually achieved. The question is, why aren't we falling from N? Why aren't we continuing south from this first bar after we've seen no demand? So we know supply is in control. We have no demand. We get a reversal bar. Why on this bar do we not continue south? We don't make that much progress. We're not pushing down like we did previously. All this volume, think about, combine the two bars at N. The volume would be about here. So with all this volume, we only make this much progress. Something's up. You know, there's nothing to do here. We're just reading this as the market unfolds. But after no demand and reversal bar, and we can't continue south, and when we combine the volume and we only net this amount of progress, it's, you know, something is clearly not right in the market. We would expect, what would we expect after no demand? This is what we'd expect after no demand, like we've previously seen. We'd expect a good move, not halting progress. And then bar O, what do we note at O? Highest volume on the chart, widest spread on the chart that closes back above resistance. And importantly, we close above all this price action. So this bar achieves a great deal, but most importantly, we close above K, which was very weak. If all this was selling, this bar should not occur. It's an aberration, a price bar aberration. This should not happen. Sellers should be protecting. They should be adding contracts. So something is clearly off. I mean, this is clear demand entering the market. There's no two ways about it. Buyers have emerged. The force of buying, as in the volume, and the spread and the close is very strong. Like I said, it accomplishes a great deal. Wipes out all this negativity that we have seen for the past 40 minutes. Buyers, now I have to make this point clear, buyers have emerged, however not in control. There's not enough evidence as yet. These four bars I find incredibly odd. There's no demand, followed by no follow through, followed by the strongest buying on the chart. Something's off. You know, this is how my mind thinks. We're trying to slowly piece together a story of either demand or supply. Again, we do not buy this bar. Demand has emerged, not in control. There's a big, big difference. Then bar P. What do we note about bar P? Well, it pops its head above the highs of O, buyers into this supply bar here. So the pop drives up, buyers cannot sustain the intensity of buying, and consequently we fall, closing week fairly deep into bar O. So what's important about this is sellers have emerged at resistance, where they should. Okay? Then bar Q. Another interesting bar. Why? Well, it has, let's just say, the same volume, very close to the volume of P. But sellers continue. Think about the action of Q. From the lows of P, so this is P, from the lows of P, sellers drive it down. Yet the buyers come back in, reverse it back up to close firm, resulting in a level close. The downside follow through has been resolved with a level close by the buyers. So this action hints that the market is trying to hold. You know, it's trying to hold. I mean, don't get me wrong, a higher close here would be better. This is a subtle hint. But the market, as we know, isn't always kind. We don't always get clean reads that is demand coming in, or lovely, perfect little no demand bars. Sometimes we have to dig deep into bar analysis, is what we're doing now. It's exactly what we're doing. And also, we do have a level close and we do have high volume. So buyers have managed to hold price here. But what else can we note? We haven't tested the lows here or the demand line, our support line. Buyers have emerged here above, so they're coming in early. Again, something to note. So wrap up Q, sellers had an opportunity for lower prices as they were here. At one point this bar was here, yet buyers came in to close it level without testing support. Buyers emerged early. And then next bar, we rally with low volume. Doesn't really give us a great deal of information here. Not every single bar gives us a great deal of information. We just focus off the ones of interest that do give us clean reads. And this leads to these two bars at R. Very interesting bars. Why? There's a lot to these two bars. Well, R1, R2 is similar action to N, R1 and bar 2. It's reversal type action. But 2 here, the second bar and R, makes no continuation to the downside. We can't close under with similar volume. So the thrust has clearly shortened. Again, the volume is the same as the previous bar, yet the spread has narrowed, so we know buying has stopped this bar from falling. There's much more to these two bars than meet the eye. There is something of real value, great importance. We've mentioned the action is similar, but the volume on the attempt to push down is much, much lower. Significantly lower. So ergo the force of selling in this market at this time is declining. It's drying up. Whilst the buyers are holding the market. The buyers are trying to hold the market here. They're holding here. They're holding here. Isn't this fascinating behaviour? So the force of selling is drying up. We've got buyers holding the market, and we've got buyers proving themselves at O. So now we could safely say there is a subtle shift of sentiment occurring. Don't forget, we have been selling. So until here, around this action here, we've noticed there's a shift. That supply pressure is easing and demand is emerging with evidence of price holding at, well, underneath or just slightly above a support level. Very interesting behaviour. Bar S, what do we notice? Another strong bar. It dips under all the price action and support to find no further selling, to reverse and close firm back above support with another surge in volume. Granted, if we could close above these closes here or above this high, it would be super bullish. It would be extremely strong. However, this is still very, very strong buying. Prices clearly rejected lower prices and is very strong. There's no doubt about it. At this point, take a macro look, step back. And it pays to do this on occasion, by the way. What do we notice? All this action from L, we cannot close under support. And all the high volume is buying. This is very intriguing. T, these next three bars, again, they are interesting, or I find them interesting. Price is unable to show follow through to the upside, and we can see this. We push up, we come down, close weak. We push up, come down, close weak. We push up, we come down, we close weak. So sellers are capping upside progress, no doubt. However, the force, look at the volume, is incredibly weak. There is no real volume. The closes are drifting down, as we can see, but the spreads and the force is weak. Plus, we're holding support. These spreads are incredibly small, especially this spread with this volume. It's the lowest volume we've had since we've broken support, and we're holding here. So we have very low volume, low force of selling at support. Where directly behind us we have buying and buying. Ask yourself, do these 3 bars wipe out the strength we see from the high volume bars? No, of course not. So although the price action looks negative, it isn't. And the last bar shows no ease of movement to the downside. There is no flow. There's no genuine force. So we have the lowest volume, narrow spread down bar at support with buying in the background. So this bar is actually strength. Now hopefully you should be beginning to acknowledge that through the bar volume relationship, these down bars are actually strength. So these bars provide very good entries when you become confident and you're able to read the chart cleanly and understand the forces of demand and supply. And then another high volume bar that closes firm. It manages for all intents and purposes to hold support. We're directly at support. I mean, sellers had an opportunity again. Price was here. But what happened? Buyers stepped in to close it firm. So the sellers did not capitalize on their opportunity. And we got to, from the close of view, the story here is of buying. All the high volume bars are buying. They are demand based at support. Whereas the down bars are weak in comparison. The selling force is light. And in addition, on each attempt for lower prices, from N to R to these 3, look, volume declines. Every attempt we push down. So the selling force is clearly diminishing. It's drying up. Every attempt for lower prices, volume depletes. The force of selling has deteriorated. When K to L, you get good flow. N, we hold. Q, we hold. R, no volume. Here, no volume. As we try to come down. With T being the lowest volume on the chart at support. Okay. V, superb bar. Good upside follow through with decent spread, closing firm with excellent volume. Now there is a subtle hint of additional strength here. The volume is less than you, yet the spread is wider and the close is a little firmer. So we're getting good flow to the upside. And why is this? Because there is less selling to absorb. And we know there's no selling. We can see it diminishing from this price action. So this confirms our story. Buyers are really beginning to take charge. And V also wipes out all this price action to the left, the last 45 minutes or so of price action. This is how we like to think. And 0 downside progress from you. We just drive hard, closing firm. W, what do we see at W? No supply bars. There is no, we're trying to come down with a narrow spread with low, the lowest volume. So we have the narrowest spread with the lowest volume after good buying. There is no supply, no thrust, weak volume, same here. We just drift down. And then X, evidence of buying. We close off the lows. And then Y, no supply again. The lowest volume down bar on the chart, again we're at support after good buying. So all of these bars here just reflect the lack of selling pressure. There is no selling force. It really has depleted. And then boom. Look at this. Break. Huge force. Great volume. Good force. Closing firm. Close above this high. Break resistance. And 2. Get continuation. So let's do a recap. We began with sellers in control with evidence of poor buying, whilst being in a confirmed downtrend. Then we hold support and begin to see sellers not take advantage of their position. No downside follow through, no downside follow through. At the same time, buyers are holding, buyers have emerged. So the force of selling diminished whilst buyers begin to hold the market and start to emerge time and time again. What's important about this action is as the trading range gets older, the buying occurs more frequently, become more aggressive, and the supply from N, from R, from T to W gets less and less. So the buyers are showing their hands quite aggressively all around here. 1, 2, 3, 4, 6 bars, 50% of them are huge buying bars, and all the down bars in between have low volume. It could not be more evident to a trained eye. Once you become familiar with this, it's jumping out. This action needs to be bought. I mean, an aggressive trader could take S. That is an aggressive trade, but you would certainly have to trade T, or you could take U, V, or any of these bars. So out of 5, 10, 15, 20, 30, so out of 45, 50 minutes, you get 5, 10, 15, 20. Literally, you get 35 minutes out of 45 minutes where the market is begging to be bought. Isn't this action fascinating? We can literally see the force change hands from the sellers to the buyers with all the subtleties in between. Being able to read the markets in this manner will give an edge that is far superior to any indicator that exists in the world. However, it does require time, effort, and practice, and unfortunately, most are unwilling to do the necessary work. We don't need to do the whole bar by bar analysis. What's important is just to recognize the shift in behavior from the selling to the buying. So we're in a downtrend to L where we hold, and then as we see buying, we spot buying, and then we note there's no supply, and then there's no supply, and we see it diminish. That's our analysis, and we can enter from anywhere here onwards. Of course, to get to this level of chart reading does take time, but more importantly, it takes practice. Most people aren't willing to practice. This is a skill. Chart reading and trading like this is a skill, and there's nothing lagging. There's no indicators. We're reading price and volume as it unfolds bar by bar by gauging the forces of demand and supply. Good. Are there any questions? At K, would you compare the volume and spread to E? K has very high volume. Spread at E, volume. K, spread and volume. Oh, I see what you're saying. Yes, you would compare the spread and volume. And K, as we noted, that K does have very high volume. That's good thinking. I like the way you're thinking. But you must consider, what is bar K? You know, what is this bar in question accomplishing? At K, we break support and we hold under. It is very high volume, but we do close under support. We hold under all this price action. Bar E, what does bar E really do? It breaks this local level of support, but we can't gauge a great deal of data. There's no reason for buyers to be in this area. Agreed? But we know buying should be here. Why? Well, first of all, we're at support, and we've noted that buying has occurred in force with good volume along here before. Using so contextually, bar K is completely different to bar A due to structure. For sellers to overcome the buying here, they need to sell twice as much to get the same result, because buying will be active, or should be active, at support, where E, we wouldn't expect any buying here. There's no need for buying to occur here. Although it is very high volume, it does achieve something. But like I said previously, this bar will be monitored. Will be highlighted. Okay? I mean, what does it mean? We don't know, because none of this price action would be here. We need more data. Very good question. I'm glad that answered. Yeah, good.